Okay, my name is Rick Roller. Welcome to tonight's class, and with me today as our co-host and producer is Mr. Dan Naylor. Tonight we're going to be talking about math, and
Yay.
yeah, yay. Okay, so when we're talking about math, for those of you that are really good with math, you're going to say, "Oh man, I took the test, but I wish there were more math on it." You know, because but for those of you that struggle with math a little bit, we're going to take care of that tonight, and we're going to cover 6 concepts that will help you get through the math. And like one of you was saying, Rayanne was saying just a few moments ago, sometimes it's not doing the math that's the problem. It's setting up the problem. It's understanding how and what to do with the terms and whatnot. So we'll be covering all that. But I want you to understand something. When I say math, and we all say math, that's just a common term that we use. Really, all we're working with is arithmetic. It's just arithmetic. And if you can do addition, if you can do subtraction, multiplication, division, you're going to be fine. You don't have to do any amortization tables. You don't have to do any real algebra, but you do need to know how to set up the questions and get to the answer that they're asking you. And we're going to work on that tonight. And I'm going to give you some tips that are going to be very, very helpful. So when you get there, you need to fear no numbers. And okay, I had a lady one time that took the test and she totally freaked out. She was just totally phobic, and she got herself worked up into such a frenzy that when she went into the exam, she freaked out because because I told her you're only going to see about 8 to 10 math problems. That's it. Okay. And on a test where you need to get a 70%, there's 80 questions. Most of the math will just be on the national. In fact, there's very little on the state, if any. But on the national, you might see about 8, maybe 9, 10 questions somewhere in there. But if you can run your math, I mean, if you could miss 30% of the test and there's 80 questions, you could miss 24 questions and still pass. So you could flunk all the math and still just be fine. But you better be dang good on the rest of the material. Okay.
Right.
So I suggest you pay attention in the class. This is being recorded, so you can watch it multiple times if you want. There's a PDF that you can download and work some of the sample problems, and you'll be well prepared. You'll be well prepared. Okay. Good enough. Just stick with me. If you have any questions, just ask and we'll get to them. Fair enough?
Sounds good.
Anyway, this lady that was so math phobic, well, she flunked her test and she got real upset. She called me afterwards. She says, "Roller, you lied to me." And I says, "Oh, ma'am, I would never lie to you." She says, "No, you lied to me. You told me there's only going to be like 8, maybe 10 questions on the test for math. Every question was math." And I said, "What are you talking about? It's impossible. The computer algorithm wouldn't allow that to happen." "Oh, no. Every question began with a number. 1, question 2, question 3. Worst case of math phobia I've ever seen."
Wow. Yeah.
Actually, that's a joke. It never really happened.
Yeah.
All right. So, folks, we're going to get started off tonight, and we're going to start off with some property tax questions. So, Dan's going to roll a short little video that explains it, and then I'm coming back. First will be property tax. There's a formula for this. It's really easy. If you like to play poker, you can remember this with the concept of the full house. 3 of a kind, 2 of a kind. These stand for different things. You got to draw a line here, you got to draw a line here. This is the appraised value. This is the assessment rate. That gives you the assessed value, which you will multiply by the tax rate, which will give you the tax due. Okay, appraised value, assessment rate gives you assessed value, times the tax rate gives you the tax due. But what most exam writers do, devious as they are, is they never give you a straightforward problem like this. They usually start from the bottom and then work up to the top. Now, there's a couple of things you got to know in order to work these well and efficiently. One of them is you must know that a mil is equal to 0.001. Now, I said mil is equal to what? 0.001. This is 1 mil. So what would 40 mils be? 40 mils would be 0.040. If 1 mil is 0.001, 40 would be 0.040. Sometimes they give you the tax rate as a mil, and sometimes they give you to so many dollars per hundred or so many dollars per thousand. But you're going to have to convert everything to mils. And a mil is 1/10 of a penny. 40 mils would be 4 cents. Okay? You got to know that. Now, with that in mind, let's work a real simple problem so you can get a handle on this. Let's say that a person paid last year taxes in the amount of $1,142.40. $1,142.40. The tax rate was 8 mils. Let's say the assessment rate was 80%. The question is, how much was the appraised value of the house? So $1,142.40. That's the tax they paid. And this is what most devious examiners are going to do, is they'll give you that number. But if you remember the full house, you can write this down if you wanted to, AAATT. You could put your lines in here and put your lines in here. Where would the taxes due go? Well, they go on the bottom. So we put that right on the bottom. And then they'll say the tax rate was 8 mils. Well, 8 mils expressed as a decimal equivalent would be 0.008. That's the tax rate. The assessed value, or they may not give you, okay? Probably what they'll do is they'll give you the assessment rate. Let's say the assessment rate was 80%. Well, as you remember, percentage sign, if it's 80%, convert that to a decimal equivalent. 1/2 goes right here, okay? And then the question is, how much was the appraised value of the house? Now, when you're going down this way, it's multiply in order to get to this. The devious examiners gave you this, so now we got to go up this way, which is divide and what? Divide to get to the top number. So we divide the amount of taxes paid by the mill levy, and that gives us the what? Well, the assessed value, which we put in right here. The assessed value then would be $142,000 and 800. So 142.8. And then now what do you think we got to do in order to come up with the last missing number? Well, we got to divide again. We divide this, which is the assessed value, by the assessment rate, and we divide that, and we find out that this property had an appraised value of $178,500. Okay? This is the answer you're probably looking for. So, very simple problem. Remember the full house, 3 A's, 2 T's, and then what goes in there, and that will give you, if you go down, multiply if you go up, which you'll probably be going up, and that's how to work that problem.
Okay. Does everybody understand what a mill is? What is a mill? Dalton, what's a mill? You're muted, Dalton.
That's a dollar amount, isn't it?
No, a mill is how they express a tax rate. So a mill would be, 8 mils would be what decimal equivalent? Remember I said a decimal sign, it has those 2 little numbers and the slash, 2 little zeros and the slash between it. That's what I meant when I say 1, 2. So you take 8 and then go 1, 2 spaces over, 1, 2 spaces over. 0.08 is 8 mils. So what's 80 mils? Dalton, what's 80 mils?
10 times that amount?
Yes, 0.080. 0.080. So now, with that in mind, then you have to remember, it's aces over tens, 3 A's, 2 T's. Okay, and then you draw the lines when the letters change. So let's take a little scroll down into the first additional problem we're going to work tonight on this topic, and this is question number 1. So M's house has an appraised value of 380,000.
Rick, double click
If-
the screen share.
Double click what? Oh yeah, screen share. Okay. Thanks. Can everyone see the question now?
Yes.
Okay, so M's home has an appraised value of 380,000. If the assessment rate is 60% and the tax rate is 7 mils, what will be the tax bill at the end of the year? Now, Rayanne, you said, well, how do you set this up? Well, you've got to do the what? You've got to work through the problem and find the numbers that you need. So first of all, you got to read the question twice. So let's read it again. M's home has an appraised value of 380. Now, who did the appraisal on this home for tax purposes? It was the county assessor's office. And someone in the county assessor's office figured out what they thought the house was worth. If the assessment rate is 60%, who determines the assessment rate in the state of Utah? State legislature. And it can go up, it can go down. Right now it's 60%. And the tax rate is 7 mils. Now, who determines the tax, the mill levy? That's also, sometimes we get to vote on that if there's something that we're bringing in that's abnormal, but that's part of the state budget, okay? So what will the tax bill be? So what we're trying to solve for is how much taxes is going to be due at the end of the year. Got it? Okay, so you got to set up your formula. We got 3 ACEs. Appraised value, assessment rate. Line goes here. You go 1, 2, then a line, and then 1, 2, and a line, and then 2 tens, tax rate, tax due. If you can remember this, you're going to be fine. Now, what we're trying to solve for is tax bill. So are we going to be working down or are we going to be working up?
Down.
We're going to be working down. So this is an easy one. It's not even backwards.
No.
Upside
Yeah.
down. Okay. So what are we going to put right here for assessed value? Or
380.
appraised value. Sorry, appraised value.
380.
Yeah, 380,000. That goes here, doesn't it? 380 grand. Okay. The assessment rate is 60%. Okay. So 380 goes there, 60% goes there. And from that, we can come up with the assessed value because we just multiply. See, you've got to, we knew the rate was 60%, but a lot of people get caught up. They say, well, how do you change a percent sign to a decimal equivalent? Well, look at the percent sign. It's got the 2 little zeros. So you start over at the right and go 1, 2, you slide it over. So 0.16 is the same thing as 60%. What if it was 120%? It's the same thing. Start over at the 0 at the 120 and you slide it over 1, 2. So 1.2 is the same thing as 120%. So that's the first thing. Then we can solve for assessed value. But that gives us the next thing, which is the mill levy. And remember, you have to know that a mill is 0.001. 1 mil is 0.001. So 7 would be 0.007. Once again, it's another multiplication. Easy peasy. The answer is the answer B on your test question, although we didn't show the questions, but if you did the printout, it's answer B, which is not really that important, but that's how you do it. Any questions on how to do this from the top to the bottom?
Nope, that one's good.
Okay, all right, so let's do another one. Now this one says Jay paid $675 in tax, property tax, and the tax rate is 2 mils, and the assessment rate was 75%. What's the appraised value of the home? This is probably more common to what you're going to see because they like to do things backwards and upside down. It's more confusing. Okay, so here we go. We know what are we trying to solve for is appraised value. But we know the appraised value normally is at the top. Now, if you want to, you can invert these. This is just the opposite of what we looked at before, isn't it?
Yeah.
So if you're more comfortable doing this way, it's fine. But I just do it the other way. So, but we're going to do this way because this is what is illustrated right now. And then we'll talk about doing it, the other way. Many roads lead to the top of the mountain, so, but anyway, this is another road. So they gave us a tax due, didn't they? Well, that was right up here, wasn't it? Okay, so we put, and they gave us the mill levy. That's, and then they gave us the assessment rate. All right, so tax due, that was the 675. The tax rate was 2 mills. So in order to solve for the assessed value, we divide the one on the top by the one on the bottom. Here we go, right here. And then we come up with this.
Mhm.
Okay. Are you with me?
Yes. Yeah.
Now, to do these calculations, you only need a simple little calculator. You know, you don't need a fancy calculator because we're just doing arithmetic. There's no amortization. There's no calculus. There's hardly any algebra. The algebra is just understanding where to put things. Okay, and our assessment rate was 75%, which we convert to a decimal equivalent. Some of you like to use your percent key, and that'd be okay, but only if you're a math savant. If you're a normal person, don't just change it to a decimal equivalent. It'll save stress. And the appraised value then would be $450. Okay, you got that?
Yes.
Okay, Larry, how you doing? Did that make sense to you?
Yeah, I got it.
Okay, cool. All righty then. So you're back to me. Now, I said earlier, you only need a simple little calculator. I swiped this from my daughter at home. It says, give me that calculator. I brought it with me tonight in case I have to do any calculations. But I don't use one of these. I use a fancier one just because I'm a calculator snob. You know, so I like to use an HP 12C or another fancy calculator. But for heaven's sakes, you don't need one. And I do not want you to go out and buy a real fancy calculator you do not know how to use the night before the exam and then spend the whole night trying to figure out how to use the stupid calculator. Don't do that. Take a simple little calculator. The truth is, they're not going to let you use it anyway.
Really?
Yeah, no, they're not going to let you take it in. They're afraid you have in the battery compartment or something, you have a little cheat sheet or something. So it won't do you any good anyway. But it might give you comfort. So take it. They'll make you lock it up in the safe before you go in there anyway. But they'll loan you one of theirs. Then it'll be another simple, stupid little calculator like this.
Okay.
Or there's also a calculator you can use on a computer, but then you've got to use the mouse and, and if you're good at that, go ahead. But I get the calculator, okay.
Okay.
All right. Okay. But they'll lend you one because they won't let you bring yours in.
Oh, that's good to know.
Yeah. Well, anyway, but if you want to take it for comfort's sake, you certainly can. Okay. So, that's the first type of question you're going to see. And what you need to remember now, going back to our screen save, let me see. I'm going to go here and I'm going to go here. All right. Now going back to, can you see the screen now with the backwards formula on it?
No.
Nope.
Oh,
How come, Dan?
Double click the share.
Oh, I didn't click share. Okay, sorry. Okay, it's there now. So this is backwards. Now, if you were doing it the other way, you just have to remember, if this were on the top and this were second, third, fourth, and this was last, like I first set it up for you, remember? Well, anyway, then remember on this side, it was multiply as you're going down and it was divide as you're going up. So either way works fine. Okay, just pick the one that works best for you. And if you're a little confused on this, I hope you're not, but if you are, you can always come back and watch this video again because it's going to be, relatively short and you can do it again. Okay, so we're ready to move on now to something a little bit more interesting, and that's cap rate. Now on the exam, I've seen this called different things, and this will be mentioned in the video that we're going to watch right now. Okay, the second type of problem that gives students a lot of heartburn is the cap rate problem. Cap rate problems are really not that difficult, but you just got to wrap your head around what they're talking about. Now, I've seen cap rate in a real estate exam called cap rate, but I've also seen it called rate of capitalization. I've also seen it called capitalizing an income. Okay, but most of the times, the way you'll see it in an exam is they call it rate of return. All of these are talking about cap rate. So whether it's cap rate, rate of capitalization, capitalizing an income, or rate of return, I left a cap, and rate of return. This is the one you're probably going to see most often on most of the real estate exams out there across the country. It has a formula. The formula is IRV, IRV. And what that means is income divided by rate equals value. Income divided by rate equals value. Income divided by rate equals value. Okay, so there's some tricks here. First of all, trick one, knowing what you're talking about and knowing which formula and how to use the formula. Trick two is that these are always annual, 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 annual. Cap rates are always what? Click your finger.
Annual.
Annual. Now, if you forget during the exam, all you have to do is go like this. Someone across the room who saw this video will say annual. It's kind of a hypnotic technique there, so it'll help you out. But what are they going to give you? Well, if it's always annual, what they're going to give you guys is they're going to give you like quarterlies. If this is a year, they'll give you quarterly income. Or if this is a year, they'll give you semi-annual. Or they might give you monthlies. Okay, so they're never going to give you the number you need. They're going to give you quarterlies, semi-annual, or monthlies. And of course, you're going to make all those annual, annual, annual. Cap rates are always what? Annual. The next thing you have to know to do these problems, which is also a trick, is what kind of income are we talking about here? We are never, ever, ever talking about gross income. Never. It is always net operating income, also called NOI, net operating income. So the income you need is income, quite simply, that is, and I'll give it to you monthly, you got to make it annual, and then you've got to turn it in, so you might be having an income of $125,000 or something, and then they're going to say, and the operating expenses for this were 25%, or they might give you the number, $25,000, and so that would mean that your net operating income was, NOI, was this number. Often on real estate tests, as I've told you before, that they will give you a number that you have to manipulate in order to get the real number you need to stick in the formula. If you stick this number in the formula, there'll probably be an answer that's there that mathematically works, but it's the wrong answer because you use gross income and not what? Net income. Net income, and of course, it has to be annual. Okay. Now that you have the numbers you need, let me give you a real simple example. Okay? Let's say our income, and it's NOI, and it's annual, was $100,000. Okay? The capitalization rate, or rate of return, their investors are demanding in this area, is, let's say, 8%. And 8%, as a decimal equivalent, would be 0.08. So what was the value of that property? Well, the formula tells you divide this one by that. You come up with a value of $1,250,000. Okay? It's just that simple. So the math itself is really arithmetic. If you understand the formula, you understand what they're talking about, you understand how to convert a percentage to a decimal equivalent, and you understand that income is always annual, and it's always net operating income. Those are the tricks involved with cap rate.
Okay, so let's look at the questions that we've written for you that are on your question PDF. Kay has an investment property that they would like to list. They currently earn $10,000 per month in rent, and the expenses include $5,000 in maintenance and another $300 a month in tenant improvements.
Rick, double click on the share.
Oh, sorry. Okay, Kay has an investment property that they would like to list,
and they currently earn $10,000 per month in rent. And the expenses include $5,000 in maintenance and $300 in tenant improvements. At a cap rate of 6%, what would the listing value of the property be? Okay, so what we're looking at here is some tricks. And the first trick is this one right here, per month, right? So what we're solving for is we want to know what to list it for. You know, they want to know. And so here's 10,000 per what? Per year or per month?
Month.
Month.
Per month. So first thing we got to do is make it annual, right?
Yeah.
Okay, so what's 10,000 per month times 12 months? 120 grand a year, right?
Yep.
Okay, so you jot that down. You're allowed some scratch paper. And when you're doing these math problems, most of them will be two-steppers, just like this. They give you numbers, but you have to manipulate the numbers in order to get the numbers you really need. That's step one, in order to work the problem. So we got 10,000 per month, which is 120,000 a year. Expenses include 5,000 maintenance and $300 in tenant improvements. Now, to make NOI, we have to take off the expenses. And the maintenance and the tenant improvements are expenses. So that's 5,300. But is that monthly or is it annual?
That's the problem.
Well, that is the question, isn't it? Because it's now you could work it both ways and see if the answer is there or not. That, you know, but that takes too much time. When they give you something like this and they start with 10,000 per month, what follows in that same sentence would also be monthly.
Because I just did it without it being monthly and I couldn't, the answer wasn't there.
Yeah. Yeah, that's because it's the wrong answer.
It's,
Okay,
okay, but-
so we got to take 5,300, but once again, that is what? Monthly.
per month.
Yeah, so 5,300, you know, times 12 is going to be 63,600 bucks. And then we're going to subtract that from what?
120,000.
120,000, right? Which gives us 56,400 bucks NOI. Is that the number we need to use?
No.
Say, yeah, yes, it is the number we need to do because
Oh.
that is the NOI, right?
Right. But divided by the cap rate.
Right. And now we need to set up a formula. So we have the income and we're going to divide it by the cap rate, which they are wanting how much?
6%.
6%. So here's the annual net income, 10,000 minus the expenses. Now what this is another road to get there. We took the 5 and we went ahead and took 5,300 off the 10.
Right.
Okay. And that gave us 4,700 net monthly. Then we multiplied this by 12. See, either way, we get you there, right?
Right.
Right. Okay. So that gives us the 56,400 annual income. And then we're going to put that in our formula, the annual income, and then we're in the cap rate they're desiring, and we're going to divide, and that will give us a value of $9,400. Okay. It's good listing. It's going to be a nice commission. You know, I probably very few agents have problems figuring out what their commission will be on this. Well, I'll get 3%. That's great. You know, that's a nice check. That's a good one. And you're worth it, by the way. You're worth it. Okay. Okay. All right. So let's look at any questions on that one.
No.
Okay, then let's do another one. P has a property that's making 3,300 net in annual income. Oh, this is much more straightforward. Do we need NOI?
Yeah.
Say yes. Yeah, yes. Do we need annual?
Yes.
Yeah.
Yes, we need annual. So that's the number we need. And therein lies the trick. It's too simple. You look at this, you say, oh my gosh, there must be a trick. It's too simple. No, that's just what it is. You've got to understand and be confident in what you're doing. The agent has found a comparable property that's making 40,000 annually. Now, would we assume that's NOI? They didn't tell us it wasn't. So we'd assume it was in NOI and sold for $1 million recently. What should the agent recommend to P as a listing price for his property? Now, thinking this, so let's read it again. P is a property, it's making 3,300 or 33,000 net in annual income. They want to sell if someone wants to sell a property, they want you to tell them what to list it for or give them an idea. And you went out and found a comparable property that's netting 40,000 annually that sold for $1 million. So if it's comparable to what they want to sell, then what we're missing in this problem, the secret sauce we need to make this hamburger with is what is the cap rate that they should be, that a buyer might expect to get on a property like this. So in order to determine that, and then to come up with the list price, we're going to have to look at we're going to have to do 2 calculations anyway, because we're going to have to do some calculations to find the cap rate on that comparable property, the one that sold for $1 million. And then we can take that cap rate and apply it to to that subject property's income. And then that will let us know what we should list it for. All right. So what is the annual income? We didn't work them here. Okay. So what is the annual income on this first one here? 40. So we're going to put that at the top. So put that in your calculator. And then since we're going up here, we have to divide to get there because we're going up. So to the value. So divide that value, divide $1 million into the annual income of 40,000, and you should come up with the cap rate of 4%.
Yeah.
Right? You got it? Cool. Now we have the number we need. So let's work it again. Only this time we're going to have a net operating income annual of 33, right?
Right.
And we're going to put that right here. Or we can put it here. And then our cap rate, we're going to put below that. So either way, whether it's here or whether it's here, you still have to divide into it. So we're going to divide this annual income by our 0.04. And that will give us an answer. Okay. Annual income of 40 divided by our value, if we move the formula around a little bit, by putting it right here, that's our first calculation. Our second calculation, the value keeps flashing there, is 825,000. You see how this one is set up. Now, for those of you that understand how to move formulas around from one side of the decimal to the other, that'd be helpful. But if you just stick with the normal formula, understanding these variations would be very helpful. So these are 3 that you really ought to work through. But you see how this comes down, right? We had to do one calculation to get the 4% and then use the 4% on the other income. And that gave us our value of 825.
Mm-hmm.
Okay.
All right. Good.
So are they going to call us cap rate? Probably not. They're going to call it rate of return.
So Rick,
Yes, sir.
for me, when I looked at it really quick, I just went 33 divided by 40 is 82.5%. 82.5% of $1 million is $825,000.
Mm-hmm. That's another road. That's another road that will get you there. And there'll only be one answer that's that close to it, right? See, that's the great thing about math. You can take a different road if it makes more sense to you. And you can work those answers backwards if you had to in order to check your work. Okay. Which brings up another topic. If you are really good at math, if math is one of the things you love, if you've done higher calculus and other things in college, guys, just as the math problems appear on the test, because they'll be blended all through the rest of the questions, just work them as they come. But if you're not quite that math savant, if math scares you a little bit, what you could do is as you go through the test, you just click the test allows you to save a question and it'll bring it back later. So save this question and you don't even work it. The reason why is because if you're a math savant, you can work this question in about 10 seconds, maybe 15. Okay. But if you're not, you have to really work it and grind through it. You're going to waste too much time. I want you to make sure you get everything done, and then you do the 6 to 8 to 10 math problems at the end of the test. If you're not the math savant, does that make sense?
Yes.
Yeah. So it's just a strategy. Okay. If you're good at math, just blow right through it, you know. And you might, you know, but if you're moderate at math, you might blow right through it. And you could also click another button that says mark for review. So at the end of the test, it'll bring everything back that you marked for review, and you can review it. And it will also bring the ones you didn't answer at all. It'll bring those back too. Isn't that cool?
Yeah, that's great.
Okay.
Good to know.
Yeah. So, and then you're in good shape. Okay.
Great.
Okay. All righty then. So cap rate is very common. Okay. So if you need more help on this, now would be a great time to talk about it. Okay. If you're comfortable with it, you can always come back and review the video later, or give me a call, 801-556. No, that's not my number. Yeah, it is 556-8000. 556-8000 is my secret cell phone number. And we'll spend a quality minute and a half on the phone. For math, it'll probably be more like 15 minutes. But you know, we'll get her done. We'll get her done one way or another. Okay, let's watch our next little video clip. Okay, a third area is, well, area. Now, the trick on area is you've got to watch the units. If they're talking feet, you've got to work with feet. If they're talking square feet, it's square feet. And if they're talking cubic feet, it's cubic feet. You've got to watch these units. To confuse you, a lot of times they'll work with yards. And remember, a yardstick is 3 feet. 3 feet. So you got 1 foot, 2 foot, 3 feet. So a square yard, like a square foot, would be 3 by 3, which would be 9, correct? 9 square feet in 1 square yard. But a cubic yard, not cubic foot, but cubic yard, it would be 3 by 3 by 3, which would make it 27 square feet in 1 cubic yard. Let me give you a simple little illustration. We've got a guy named Sam Survivalist, and he decided to dig a personal bunker in his backyard. He's going to cache all his food and ammunition and weapons in there, and it's going to be 7 feet deep. Okay, it's going to be 15 feet long, and it's going to be 9 feet wide. Okay. So we've got this bunker. He's out there digging it like crazy, and he gets it all done. And the question wants to know how many cubic yards of dirt did he have to haul off? So what's the problem here? Well, we got feet, feet, and feet. Now, figuring an area is simple. It's just length times width equals area. Figuring that in a 3-dimension, we just add the 3rd dimension to that. So it's length times width times height equals your cubic area. Figuring this as in 3 dimensions, we just add the 3rd dimension here, which is height. So in this case, it'd be 7 by 15 by 9. So let's calculate this one out. We've got 7 feet deep by 15 feet long by 9 feet wide would equal 945 cubic feet. But is that our answer? Now, if you look down there, answer A or B will probably be 945. But that is the wrong answer because this is cubic feet, and the question is asking you about cubic what? Cubic yards. So you've got to watch and make sure your units here are strictly adhered to. The units are where they're going to try to trick you up on this. And you just have to slow down, work your way through it, take a deep breath, and say, well, okay, I've got this, but is that my final answer? No. We have to divide this by the number of cubic feet in 1 cubic yard, which is 27, in order to give us our answer, which will be 35 cubic yards. And there it is, hidden down there in answer C or D. Okay. Questions on area questions? Do you have any? Yeah, let's work some more then. Okay. F is building a new home, and they've laid out the foundation, which is 30 yards by 15 yards. If their home will be 2 stories with a 10-foot vaulted ceiling, how many square feet of living space will they have? Well, let's read it again. F is building a new home. Okay. They've laid it out as a foundation, 30 yards, 15 yards. Their home will be, it's a 2-story. Oh, okay. With a 10-foot vaulted ceiling. How many square feet of living space will they have? Okay. Another trick that devious exam writers will do is they'll throw in a number you don't need at all. Which number in this question do we not need? It's just put in there to confuse you.
2
Stories?
Now, 2-story is very important.
The ceiling.
10-foot ceilings.
Vaulted ceiling.
Yeah, it's the vaulted ceiling thing. You know, how high, how much, they're not asking you the amount of cubic yards or cubic feet in this home. They want to know how many square feet of living space. And if you have, 9-foot ceilings in your basement, it's going to be a lot cooler because there's going to be a lot of cool light coming in. And that's really nice. And it makes it like big and airy. If you have a 7-foot basement, you're going to feel cramped down there all the time. But it doesn't change the square footage of the home.
Right.
Okay, so let's look at some numbers here. Okay, we've got length times width equals area. Square feet of living space is what we're solving for. Okay, so we got 30 yards by 15 yards, and it's a 2-story. So they're going to have a main floor and a top floor, and they're going to be the same. They didn't say anything about cantilevers. Some of you really trick yourself up because you make this much more complicated. Well, we don't know if there's a cantilever on the upper floor or not. It could add another, 400 square feet or something. It didn't say anything about that. Just take what you got and work with it, okay? But this 10-foot, we don't need that at all. So we're going to throw that away. So we've got the first step that we might want to do is to convert this into what? Feet. So remember that R.C. Willey yardstick that they used to give away years ago, which make great disciplinary tools around the home. Just teasing. But anyway, what happened is you got those yardsticks and they were 3 feet. So if they're talking about 30 yards, that would be 90 feet. No mystery there, right? Everyone got it? Cool.
Right.
15 yards times another 3 feet is 45 feet. Now, why do we convert to feet? Because we're not going to get lost in the transaction or in the calculation as easily if we convert it to what we really need. Our answer needs to be the square feet of living space. So let's go ahead and convert these to feet so that when we get to that next number, we don't have to do a conversion at that point because we'll probably be, anxious to go on to the next question. Okay. So that's 4,050 square feet. But is that our answer or is that only one floor?
1 floor.
That's only one floor, and we have 2-story. So obviously our answer is going to be what? 8,100 feet, square feet. Okay?
Mm.
Okay. Questions? You can do this.
Yeah.
Guys, you can do this, ladies and gentlemen. Okay. Let's look at another one. A property lot is rectangular, it's square, right? Kind of. And it's, well, square-ish. It's rectangular-ish. And it's 200 feet deep, and the total area of the property is 42,000 square feet. How many yards of frontage does the property have? Ooh, this is a good one, okay? Now, we know we're going to have to go from feet to yards, and we know that we can get there easily, but let's take a look at this. What we're trying to solve for is yards of frontage, and there's a high probability you're going to see a question just like this. So the first thing is, do you understand what frontage is? Because if you don't understand what frontage is, you can still get the answer right. but you're going to have several moments of pause. Frontage is the dimension of the lot on the street. It's the dimension of the lot that fronts the street, not the side yards, and it's not the rear yard. It's the frontage. So, there's a street in front of your house, and that's what we're looking at. How many yards of frontage does the property have? Well, all right, let's work on this. Here's our formula. And here's the street. Oh, that's good. You did that. Okay. First of all is length or depth. Okay. And then that's frontage. Okay. Thanks, Dan. That's very clear. Okay. So we got area divided by length gives us the width. Okay. So we were told the whole area was 42,000 square feet divided by one of the dimensions they gave us, which was 200. So the other dimension is what's the frontage? 210 feet. Okay. But that's not our answer because they wanted the frontage in yards. So we take our 210 and divide it by 3 because there's 3 feet in a yardstick. And that gives us 70 yards of frontage. Cool, huh? If I could go with you when you take the test,
Yeah. Would you please?
you'd have a lot more confidence,
But that's what catches me is when they're running everything in feet. Of course, your answers, when you look, now that I'm looking back at your option on the answers, it is all in yards. So you would know to convert it.
You could convert it at the beginning or you could convert it at the end.
Yeah.
On this one, we converted it at the end, showing you once again, there's many roads that can take you there.
Gotcha.
Just,
Okay.
just pick the right one. Okay.
Right.
It's like, I was thinking, how far is it earlier today? I was looking up, how far is it from Billings, Montana to Devil's Tower? Actually from Lovell. So if you go from Lovell, Wyoming, and you go through Billings, it's about 6 hours. But if you go another route, it's about 5 hours. So there's 2 different roads I could take and both get to Devil's Tower. Right? But it's probably more than you wanted to know. All right. Well, anyway, let's stop sharing. Okay. And okay. So we're back. So that was our area. Let's talk about getting a loan on a house now. And this is such a common thing in our business that you're going to see it on the test, and it's, you can do this one too. Okay. So we have another video. Let's talk about another favorite on the exam, and that is loan to value ratio, LTVR. Loan to value ratio is always a percentage. The trick with this one is that you got to make sure you get all the loans, because more often than not, they will ask you the overall loan to value ratio, which would include a first and a second mortgage if that was the test question. So read the question carefully, and then to figure loan to value ratio, you take the loan, you divide it by the value, and that will give you the LTVR, which will, of course, be a percentage. Real easily, if the value of the home was $100,000, and I'm talking about appraised value, another trick they play on these is occasionally they say, Sam Brown bought a house for $105,000. It only appraised for $100,000. He had an 80% loan to value ratio. What was the amount of his loan? It would be 80% of the appraised value, not 80% of the purchase price, which I illustrated as $105,000. Would be $80,000 loan. And that's too straightforward. What do you think they're going to do? They're going to say he got an $80,000 loan, he paid $105,000 for the property, it appraised for $100,000. What was the LTVR? So they're not going to give you this. They like to do it upside down and backwards. So then you take the loan, which was $80,000, they gave you that, divided by what the bank's going to loan on, or the appraised value, which was $100,000, and that would give you your LTV, which in this case was 80%. Look down there. It's probably answer C. I keep saying it's answer C because there's a slight favoring of C. It could be A, B, C, or D. Obviously. Okay, so what are the tricks on this one? First of all, loan to value ratio is always based on not what he's paying for the house, but what the appraiser says it's worth. In our marketplace today, it's a little challenging because people are actually paying over the offer price. So we're seeing stuff put on the market for 500 grand. They're selling for 520, because of multiple offers and bidding situations that are going on. Now, the problem is you price the house at $500,000 based on comparable sales for the area. And these are recent sales, maybe within the last 6 months or so. But when the appraiser goes out to appraise that and he sees the purchase price is 520, he's going to try to come up with that, or she's going to try to come up with that number. But it has to be supported by the comparables. So if you have comps that, are all selling for 495 and, 500 and 490, 499.9 or, 505, you're going to have a hard time getting that appraisal to come out at 520. So buyers sometimes have to pay the difference out of their pocket because the bank will only base their loan to value ratio on the what? Appraised value. So watch out for that trick. Okay. Are there any other tricks? Well, one of them might be that he has a first and a second. And so really they're looking for an overall loan to value ratio. Okay. Okay, cool. So let's look at some more questions. Okay. So H bought a property for $200,000 with a down payment of $30,000 and has been making payments on their property for 10 years. Now, 10 years later, their property is appreciated in value by 30%. It's pretty good. We're seeing 5 to almost 8% appreciation per year. And sometimes they jump up in spurts, because we're in a hyper seller's market. Can't blame the sellers. The buyers are coming in from California with cash and buying everything. They're tired of being burnt out of their houses and locked out of their businesses. But anyway, 30% of their current loan balance is 100 and in the end, their current loan balance is 117. What's their current loan to value ratio? Okay, let's read it again. H bought a property, 200 grand. Okay, that's history with a down payment of 30. It's been making payments on their property for 10 years. Is that really relevant?
Not really.
Not really, because down here, 117, they give you the current loan balance. So that's something they throw in there to mess you up. Now, 10 years later, their property is appreciated in value by 30%, and their current loan to balance is 117. What is their current loan to value ratio? Now, back then, he put, his overall loan to value ratio is 85%, because he put 30,000 down on 20, but so he probably has been paying PMI for a while. And the reason why he's looking at this and the value's gone up is he's trying to get rid of that PMI, private mortgage insurance. So if you put down less than 20% down, then 20% down on a $200,000 loan would have been 40 grand. He didn't put 40 grand down. He only had 30, but he wanted the house. He bought the house. So he paid the interest rate on the loan plus a little bump in private mortgage insurance, which could be, a couple $100 a month or more, depending on, what they figured the risk was. But he wants to get rid of that. And he wants to refi. Besides, it's been 10 years. And my gosh, anyone with a loan over 4% these days ought to be what? Refi.
Refinancing.
Yeah, refi. If they're planning on what?
Staying in the
there
home.
for a little bit longer, because they'll make the money back. And even if they want to use it as a rental or something later, it makes sense. All right. So what we're trying to solve is what is their current loan to value ratio? And we need the loan amount, the house value, and then I'll give us the ratio by dividing the loan amount by the house value. So our loan amount is here and our appreciation is here. So if he bought it for 200, but it's gone up 30%, what is 100% of what he paid for it? 100% of what he paid for it is what? 200 grand. But that was 10 years ago. And it's gone up 30%. So we would have to come up with a home value today. Okay. But what is that going to be?
260.
Well, yeah, because it went up 30%. So it's going to be 100% plus 30% or 130%. Okay. So let's insert some numbers in here. Okay. 130% because it went up 30%. See, if you have a gain, and we'll hit this a little bit later again, but if you have a gain and you gain 30%, it's everything you paid for it plus another 30%. If it was a loss, it'd be 100% what you paid for it minus the 30%. You know, if we were in a bubble and the bubble burst, and now the houses are worth 30% less than what they were paid for, you know, it'd be 70% here, right? Not that. Okay. Well, anyway, it's 260. You were right. So that goes here. Now the loan amount they gave us in the problem is 117. So we just do the math. We just calculate. We do the arithmetic. Okay. So the ratio is 45% loan to value ratio. Pretty dang good. Well below the 80%, isn't it? Another reason why you might want to refi to get rid of the PMI and get rid of your 5% loan and get a 2% loan. So between the difference of dropping off the PMI and getting a lower rate loan, you know, you're going to say, wow, I can't believe it, coming out like a bandit. This is less than what people are renting apartments for. Okay. Okay. Got it? Questions?
No.
Speak now or forever hold your peace. Okay. Thumbs up. Let's go to the next one. C is trying to qualify for a loan, but due to his current credit, they can only purchase using a conventional loan with a maximum of 80% loan to value ratio, which is great. I mean, it's cheaper than an FHA. I mean, an FHA, you have, you know, their version of private mortgage insurance, which is called MMI. And, you know, he's going to put a 20% down. That's cool. If they can make a down payment of $45,000, what is the maximum value of the property that they can buy? All right. So he's trying to get a loan. They can get an 80% conventional loan to value, and they're going to put down a down payment. So they're going to put a $45,000 down payment, right? And they're going to get an 80% loan to value. So this is all going to help us here. So what we're trying to solve for is what price home should they be looking for? So we don't know what the loan amount is. Did they give us that? No. All they gave us was the down payment. So we need to move this around a little bit. We know that the down payment that they have is $45,000. We know that the loan to value ratio is 80%. So if we divide the 80% into the down payment, it will give us the number we're looking for. 100% minus 80% is 20% down, right? So we'll just stick some figures in here. Down payment is 45 and 20% down. Okay. Decimal equivalent, 0.2. So how much is a home value? How much house can they buy? 225. Okay. These are percentage problems.
Yep, next we jump into percentage.
Okay, this is next. Okay, good. Then we're going to stop share. Okay, we're back. So let's, we did area. We just did loan to value ratios. Cool. Questions on loan to value ratios? Okay. Those weren't too tricky because they didn't have a second mortgage in them, but if they have a second, you just got to combine those two loans. Okay.
Yeah.
Now, there's a concept called the reciprocal. You have to divide the number by its reciprocal. The reciprocal is how it stacks up against the whole. Okay. So if you have a situation where you put down well, actually, we'll do that on percentage. So let's go ahead and roll the video, Dan, and we'll do it on the percentage when we talk about reciprocals. The last category of math
that you're going to see quite often will be what I would call a percentage problem. And it comes in various forms. You could have a loss, you could have a gain, but a real common one is commission. Okay, so if you're having a loss, they'll say that so-and-so sold a property for $80,000, which represented a loss of 20% over what they paid for it. And they say, what did he pay for the property? You want to know, what did he pay for the property 2 or 3 years ago before the market retraced a little bit and he had to sell it for 80 and he lost 20%? What was that? Well, to get these, it's real simple. You have to take this number here that they give you, which is what he sold it for, not what he paid for it, and you have to divide this number by the percentage that it represents of the whole. Now, when I say the whole, what he paid for it was 100%. He paid all of it 100% in order to buy it a couple of years ago. We don't know what that number is, but we do know that if he lost 20%, then this number represents 80% of that. 80% of that. Well, how do we know? Because he lost 20%. So we divide this by 80%, changing it to a decimal equivalent, dividing that into that, and coming up with $100,000. Okay? Real simple. Now to work it the other way, using the simple numbers again, so-and-so sold a property for $120,000, which represented a 20% gain, not 20% loss, but 20% gain, what they paid for the property. Well, this number now is everything they paid for the property, 100%, plus a 20% gain, which would equal 120%. And don't get scared by these numbers that have other numbers past the 1 here. It works the same way. Roll that decimal over. So you divide this by 120% decimal equivalent, and he paid how much? He paid $100,000 for it. Now, commissions are a little bit tricky because they're counterintuitive. You always have to divide a commission in. You can't just multiply a number and then add a commission on. Let me illustrate with a real quick example. Let's say you want to charge a 6% commission total, but a seller wants to sell his property. He wants to net $100,000 after paying sales cost of, let's say, $18,000. Okay, that will be the cost. Now the cost, not including commission, the cost would be maybe a lien he had on the property for a mechanic's lien. You could add all those up, or it could be closing costs, repairs, whatever, okay? But he's going to suffer or have to pay costs totaling $18,000, and then he wants to net $100,000 after he pays your 6% commission. You just got to add all this together. It's not that difficult, so let's look at it this way. Okay, so he wants to net $100,000, so he better collect another $18,000 to pay all those other costs, correct? So he's going to have to add that in. Plus he's going to have to add in a what? 6% commission. Now, if you look at this, these are easy to add in, just plus that, but you can't add in a percentage. So what are you going to do? Well, you move this percentage off to the side for a minute, and you come up with $118,000 here, and this number then would represent what of the mystery number? Well, the mystery number will be all of it. This is what he's got to sell it for. It'll be 100%. But the only thing we're missing here now is the commission, right, which we've got to add on. So this number would equal what? 94%. Because 94% of this number plus the 6% commission is what he's got to sell it for, correct? So to get this, a lot of students will just multiply this by 6 and add on the 6. You're going to be a few dollars short, and you're going to miss the question. I don't want you to do that. So what I want you to do is turn this into a decimal equivalent here, and then divide in, and that will give you the number you need. And in this case, you take $118,000 and you divide it by the 94%. That's what I mean by dividing a commission in. And he's got to sell his house for no less than $125,532. If he sells it for less than this, he's not going to net his $100,000 here.
Okay. Cool. you're going to be calculating sales prices for people based on comparables and whatnot. And they're going to say, well, but I really need to net about this much. And then you'll come up with that figure. Cost, there's a couple of ways to get the cost. There are title companies out there that have phone apps that you can put on your computer or on your phone, and it will give you the typical cost for typical purchase prices. You know, they'll add it in. And they have all kinds of formulas to get there. You just enter the raw numbers and it gives you all this info. It just does the math for you. But another way is using a seller net sheet form and then just kind of filling in what all the costs are. But you might not be able to do that until you've had a few closings because you don't know what typical costs are. But that's something you need to learn. And that's why those apps are so very helpful. But and then another way is the 2% rule. And if you're selling a property for $500,000, typically closing costs are going to be about 2%. And then whatever concessions or repairs the seller has to make, you might add on to that. And then you add on your commission as well. So those are different ways of figuring and pricing homes, and it's a little bit more probably advanced, but get the app. You know, virtually every title company in town has that now, and it's free, and they'll teach you how to use it. And when you do start to have your closings, then show up early. You know, make sure that the settlement sheets are all done, and then show up a half hour early and have your escrow agent go through them with you and use it as a teaching moment. Take 15, 20 minutes and go through it, and he'll answer or she'll answer different questions you may have on it. So then when when your buyers show up or your sellers show up, you're not just sitting there eating a cookie looking like an idiot, and they ask you a question, you don't know how to answer it. A smart escrow agent won't let you get embarrassed at their facility. They'll jump right in and say, oh, here, let me explain that, because after all, I prepared these settlement sheets. And you go, but I don't want you to be that kind of Dumbo agent. You need to know what's on there, and you need to be able to find mistakes. I find mistakes all the time. You'd be surprised. Usually it's because the escrow agent was given incorrect information, but whatever. Okay, let's look at some more of these. An investor purchased a fourplex for $550,000. Okay, they wanted to sell it as soon as they could realize a 20% gain. Hey, this is great. You need to track the values around that fourplex, and as soon as it gets up to that magic number, you got a new listing. that would be good, especially in this price range. And at what price do they hope to sell? The property. All right, so let's look at this. Well, let's read it again. Investor, $500,000. Is a fourplex important?
No.
No.
Could be anything. Land. It could be a duplex, a single family, a condo. They want to sell it as soon as they realize 20% gain. The important numbers are this and this. 550 and 20%. So we're going to solve for the price. All right, so in looking at this formula here, we got the old value, got the gain, and this will give us our percentage. Okay, now we don't want a percentage. What we want is the new value. Okay, but this is the old value here, correct? Yes? Yes. Okay. We want a 20% gain. Now, when I was talking about the reciprocal a moment ago, when I jumped the gun, a reciprocal means it is that percentage of the number it represents. So if we're having a gain here, as I explained a moment ago, what he paid for it is $550,000. That's all of it, right? So that's 100%. You see where I came up with 100% for $550,000? That's what he paid for it. He paid all of it when he bought it, okay? He wants 20% gain. So this new number we're looking for, which is the new price, will be 120%, won't it? It'll be everything he paid for it plus another 20%. Are you with me?
Yep.
That's how you figure a gain. All right, so let's put it in a formula here. We got percentage of gain, old value, and then the gain amount. Okay, so let's do the numbers here. We've got the old value, which was 520. We've got percentage gain, which was 0.2, which is the decimal equivalent of 20%. So the gain amount would be 110. Does that make sense?
Yeah.
But is that our answer?
Nope.
No, we want the price.
Right.
So now we take the 110 and add it to the 550, and that gives us 660. Now, what's another road to get here? All right, math.
Multiply 550 times 1.2.
Why 1.2? Because that's the reciprocal. But it wouldn't be a multiplication, would it? Or would it be a division? Do it on your calculator right now. Take the 550. Where's mine? Here it is. Take your
divided by.
Multiplication.
Would it be a multiplication or a divide? You tell me.
Multiplication.
It would be a multiplication, wouldn't it? Why a multiplication?
Times. Oh.
Because it's a gain. You're
Gain.
going up in value, not down. If it was a loss, what do you think it might be?
Divide.
Yeah, well, let's work one. Okay. Okay. A homeowner wants to move to a new city, and they know that they will need a down payment of 80 grand to purchase the house they want. They currently owe $215 on their current mortgage. If a real estate agent wants to help them sell their house and get a 5% commission, what would the sales price of the home need to be for the owner to receive enough for their down payment on their new house? Okay, now in this one, we're not addressing closing costs, are we? There's no even mention of it. The only thing they want to add on is the commission. Okay, but they need a down payment of 80, right? And their loan is 215. So let's do some math here. We're trying to solve for what their sales price might be. So what do we know? We know when they sell their house, they got to pay off this loan. Yes or no?
Yes.
Yes. We know they want 80 grand on top of that. Yes or no?
Yes.
Yes.
Easy. You add the 80 to the 215. Why? And that's kind of like your gross net, but we still got to add in the commission. But how do we add in a commission? Do we take 5% of our new number here, which is 295? No, we don't. We divide by its reciprocal. So we have the 80 plus the 225 is 295, okay? 100% minus 5%, because what is this? Is this new number here, is that 100% of what it needs to sell for, or is it 95%? Yeah, it's minus the commission. How much is the commission? 5%. So what is this 295? It's 95%, isn't it? Oh, the light just went on for somebody.
Yeah.
So now we take our 295 and we divide that 995. We've got to get $310,527. So I would probably list this for, $312,500. Give us a little negotiating room, or maybe 300 and I don't know, 1,000, 1,500,000, whatever. You got to give a little negotiating room. Right now, you'll probably be selling this house for 320. And you'll have plenty of negotiating room because it's going up on the upside because of our strong sellers market. Yeah, we'll see what the future brings. Okay. So.
Okay.
We're ready for another explanation. What we're going to talk about now is we're going to talk a little bit about a loan, principal and interest, okay? And we're going to explain this without the video because we don't have a video for this. But whenever you get a loan on a house, there's going to be an interest rate. And the interest rate on all real estate loans is what we call simple interest. It's not compound interest. Compound interest is what you find on credit cards for the most part, okay? But real estate loans are all simple interest. So if your rate is 3%, okay, that's 3% times the principal amount. So if you have a $100,000 loan, you'll be paying how much in interest for a year? 3%. Now, rates as they are quoted are always
annual, okay? So they're simple interest and they're always quoted in annual rates. So one trick you might run across is they want to know for one reason or another, how much is the interest paid in any specific month. In order to do that, you need to know what the principal of the loan was going into the month. Real estate interest is always paid in arrears. So a December payment that you may have made, if you have a loan on your house, but a December payment that you may have made would pay what month's interest?
November.
November. That's right. And so as we roll through the month of December, we make a January payment, it's going to pay December's interest because interest is always paid in arrears. And there's some things that can be helpful to you. But let's look at some actual problems, okay? So a buyer has a new 40-year loan on their home with a total amount of $480,000 with an interest rate of 4%. The taxes are $2,100 and they're currently paying $1,500 in insurance. Okay. Now, are taxes monthly or annual? My gosh, it had to be like, you know, a multi-million-dollar mansion to be $2,100 a month in tax, wouldn't it? Yeah. So
Right.
obviously this is annual, and insurance is you know, normally an annual. We figure that as an annual cost, but we break it in monthly. So what would their balance be after the first payment of $2,500? Now, I told you earlier there will be no amortization on the test, and this is really not an amortization problem. You're not asked to calculate a first, second, third, and fourth payment. You know, figure the first 6 months worth of payments. That would take forever, or unless you have an amortizing calculator. So it'd be quicker, but we don't need to do that. All they want to know is what will the balance be after your first payment? Well, what was the loan amount going in for the first payment?
Rick, are you sharing that?
Oh, aren't I? Oh, let's share. Okay. No, I'm not. Sorry. A buyer had a new 40-year loan on their home with a total of 480. I'm having too much fun. I'm sorry. Somebody say, hey, Roller, share the dang thing. Okay. Thanks, Dan. Okay, 480,000 with the 4% interest rate. Okay. The taxes are 2,100. They're currently paying 1,500 insurance. And what will their loan balance be after the first payment? All right. So this, if you're a math phobic and you see this question, I don't want you to freak out because this is a frozen moment in time. They're not asking you to calculate a series of payment. You know, what will the loan balance be after the 7th payment? You need an amortizing calculator to do that, you know, and they have a computer chip in there that allows them to do that. But this one, you don't need it because this is the brand new loan. It's the very first payment right here, $2,500. Okay. So let's work it. They want to know what the balance will be. In order to know what the balance is going to be, we need to know what the principal reduction was, right? Okay, so we need to know what their monthly principal payment would have been, and then their monthly interest, monthly taxes, and monthly insurance. Because the first payment, $2,500, that was obviously a monthly payment, right? Of course, you have to assume it's a monthly payment. All right, so let's fit, and that'll give us our total monthly payment. So let's look at what we're looking at here. We've got a loan, and it's $480,000 with a 4% interest rate. So what is the interest that will be paid for an entire year? Because remember, this interest rates are quoted as an annual figure. So what would that be? Well, let's work it.
1920.
Yeah, well, I'm working it from the top down. Let's write that down. What was it again?
1920.
1920. Okay, is that annual or monthly? That's 4% of this. It's annual, isn't it? So what do we have to do with that 1920? We have to divide it by what to make it monthly? 12, right? So what is what will our interest payment be?
1,600.
No, that's too much.
Divided by 12. Oh.
We're talking about 1,900.
160.
How much?
160.
$160? I'll buy that. Okay, well, anyway, let's do some math the way we've got it calculated here. We're going to figure out the taxes, $2,100 or taxes, and that is annual, so that's going to be 175. Okay, and then we had $1,500 annual insurance divided by 12, that's 125, because we're figuring a monthly payment. This is another way of getting there. And then we've got the 4%, 1920 annual interest, but we're going to make that monthly. So that's going to be $1,600, right? I said 160, but I meant 1,600. All right, you with me?
Yeah.
Okay, so you add these three up. Why? Because that's your, that should be your $2,500 payment. Yes or no?
Yes.
Yeah. Okay. But really, what we really want to know out of here is, we take the taxes out and insurance out, and we come up with our principal amount of 600. You see how we came up with this? This is our monthly payment. So if this went to interest, and this went to insurance, and this went to taxes, and this is the total we paid, how much went to principal reduction?
600.
$600.
Yeah, $600. Now, is that our answer? No, because what was the question?
Much after the first one.
What's the loan balance?
After
Well, what did we start out with the loan? We started it out at 480,000 minus $600. And that gave us our loan balance. Our new loan balance going into the next month will be $479,400. Okay. That's our new balance. Now, as you can see, sometimes you're going to have to do some real noodling on these things in order to get the numbers you want and then put them in the right place and to work it. And that's, so if you're a math savant and this is all clear to you, work it as it comes. But remember, if you're not, you might want to work it at the end. Why? Because if you spend too much time noodling on the math and you get to the end of the test and you still had 10 questions to go, but your time is up, you'd be better off answering those 10 questions. See, then you lost 10 questions, because the computer will shut you down. I mean, time's up. You only have 4 hours. So you don't want to do that. You want to get through the other problems first and then work on the math, because it gives you're under less time pressure. Okay, you don't want to get to that end and say, oh my gosh, I'm about out of time, right? You shouldn't be. A lot of the questions you're going to be taking on the test, it will take 5 seconds, 10 seconds to answer. Then you go through it. And some will take a little more because you have to kind of read it twice, because you should read every one of them twice, like I keep saying, and you'll be in better shape. Okay. All right. Well, let's look at another one. Here's a homeowner has a monthly payment of $1,500. Their next payment includes $1,100 in interest on a 5% loan. Well, what's their loan amount? Okay. What's their loan balance? Well, gosh, guys, how are we going to figure this one out? We got to figure for loan balance. Okay. Is this payment that we're paying, is that an annual payment or a monthly payment?
Monthly.
Monthly. And this percentage of the loan amount, or the interest rate, is that annual or monthly?
Annual.
It's annual. So we got a conflict here. We got to make this one into annual, right? So we just take this and we multiply by 12, right? So our annual interest is $13,220. Okay. So is that our answer? No, that's our annual interest. So, they want to know the loan balance, not our annual interest. So here's our annual interest. And what was the interest rate? 5%. So once again, we divide by the reciprocal. This number here represents what? Your 5% interest rate for the year. So you divide that, our loan balance is $264,000. It's simple interest. The interest rate is annual, okay? But usually the payments are monthly. You might run into a situation where they have a quarterly payment, okay? So did we need this $1,500 total payment?
No, because that may have included taxes and insurance, which they didn't even tell us what that was. All we needed to answer this question was this and this. And, and making it annual, right? Are you with me?
Yeah.
Cool. Okay, cool. So, my friends, you can do this. Okay. This video was recorded. We went a little bit long. We went about 1 hour and 20 minutes, but it had a lot of meat in it. You're welcome to watch this as many times as you need. We do have some other math questions that are available to you. You can use as practice questions as well. And just do the best you can. But remember, if you're really good in the rest of the material, you can miss every math problem. But don't do that. Learn the math so you know that you got those 8 or 10 right for sure. Make sense to me? Makes sense to you. Andrea, you got a question?
Yeah, I have a question. The math, the math chapter in the actual course, the review quiz was pretty rigorous. And anyway, maybe I was tired when I did it. How does this stuff, what would you say in comparison? You're saying it's only 8 questions. It's going to be a lot less questions, but as far as the level of rigor per question.
Yeah, well, I say 8 questions, and there might be 8, there might be 9, there might be 10. But usually there's about 8. Sometimes less, but usually it's about 8, because that's what they figure is a good number to test a student on, and the algorithm will go out and pull 8 and throw them in.
I guess
Dan,
what my question is.
Dan, why don't you answer Andrea's question because you're more familiar with your math chapter?
And if I could restate it just a little bit.
Okay.
Without getting you guys in trouble, right? There are a lot of other formulas that are covered, like GRM and, yada, yada. So
Like
the question, well, there were many other subjects, it seems, covered in that.
Dan, your comment, please.
What's your question? Just how many do you need to know? That kind of a thing.
She's wondering because the math chapter seemed to have more in-depth math review than what we did tonight.
Well, yeah, we covered 5 specific things that are going to be common on there.
We covered 6. Actually.
6, thank you. So there's possibly more math on there, and if you look at your exam outline, it tells you all the possible calculations, right, that you might need to do.
Okay.
But we covered most of the basics here, so there's only a few that we didn't cover that are on here. Most of them are variations of what we did cover. So I think you do have most of it covered with what we did today, but it's hard to cover everything for the exam in 90 minutes, right? So
So true. Thank you. I just wanted to.
Yeah, a lot of times it's the same guy. He's just wearing a different costume.
Okay.
Okay.
Makes sense. Thank you for speaking to that point.
Yeah, you guys are going to be fine. The fact that you're coming to these reviews and putting the time in, you're going to be fine. And it's but our goal is to get you with the most probability, and then pound it into your head in a way that you can remember it. And then when you get through the exam, our goal is you walk out there and say, that wasn't near as bad as I thought it would be. That's our goal. Okay. And we've been there many times. Recently, I took Arizona and Colorado just to do some more. I'll probably go over and take Nevada in a few weeks. I try to keep apprised of what's happening. And Dan dedicates tons of time. And guys, if you see something as you walk out of the exam that, what the heck was that? That's a question from hell. It wasn't even discussed in any other class material. Give us a call. We want to know what it was. But chances are we haven't. Remember, there's 80 questions on that exam that count for your score, but you're going to have maybe 84 questions. So there's 4 questions that are test the test questions. It's new topics that really don't count for or against you, but they don't tell you which ones they are. So just count it up. Oh, that must be one of those new test the test questions.
Okay.
Yeah, that's the other problem is they don't give you your score. Boy, you should see the look on your faces. They don't tell you your score. They say pass or fail. If you fail, they give you your score. You know, you got a 69. Oh, dang, I was 1 point off. But if you pass, they just say you passed. Well, what was my score? I want to brag. We'll just tell everyone you got 100%. So they're not going to tell you. Thank you so much for being here. You know, we're
Thank
here for
you.
you.
Thank you
Good
so
to-
much.
You guys
Thanks,
mean
Rick.
everything to us, and we really want you to get through this silly little test, get your license, and we also want you to get out there and make bless lives and make money. So thanks for being here.
Appreciate your time.
Thank you,
Thank you.
guys.
Thanks, Dan.
Thank you, Dan.
Thank you, everyone. We're really glad you're here. Thanks, Rick, for doing a great job.